think we're live.
Manu, over to you.
All right. First of all, I want to say thank you so much, Austin, Cassidy, and Krishna for joining today. We're going to have a super fun conversation about investment trends and what's happening in the world currently. Before we get started, why don't we do a quick round of introductions so like that the audience gets to know you guys. And let's start with Austin.
Hey, everyone, and thanks, Manu and Wendy, for having me here. I'm very excited to chat the most recent trends. A little bit of an introduction of myself. I started off working in cross-border payments, and of course, that's very, very closely related to cryptocurrencies, especially in the early days when people were thinking about what use cases Bitcoin and other crypto assets could have. So got involved in the crypto space in early 2013, but as it tends to happen with people, once they fall down the rabbit hole, it turns from like a hobby to a passion to further and further until I decided I had to do it full time. So I started a company building repurchase agreements for tokenized securities, so essentially liquidity products for various types of loans, and worked on that for quite a while before moving to 21 Shares, which is an exchange-traded product issuer with digital assets as the underlying, and then most recently joined CoinFund in an investing role.
Welcome again, Austin.
Thank you, Manu.
Now let's go with Cassidy.
Thanks, Manu, for hosting. So I'm Cassidy. I work at Centrifuge. Centrifuge is based in Berlin. I work on token design and research at Centrifuge, and we're doing decentralized asset financing. So that's financing real-world assets through DeFi mostly. So that's been an exciting growth for us right now.
Awesome. Welcome, Cassidy. And now let's go with Krishna.
Hey, thanks for having me here. So I initially got into crypto through a hack space in Vancouver called Decontrol. And it's this old basement where, we were tinkering around with like privacy technologies. And I started helping host a meetup on Ethereum. And that's how I got involved with QuantStamp, which is a security company that essentially secures a lot of value at risk in smart contracts and layer 1 blockchains. And on the other side, I've also been an angel investor, indirectly or directly involved with over 30 companies, both on the crypto and non-crypto side. And that's how I essentially have been involved in this space for the last few years.
Awesome, Chris. Welcome. Now to Wendy.
Thank you. So we have folks in the audience who are at very different stages of knowledge, interest, comfort, and savviness, including myself, around these pieces and parts of the digital economy that each of you just made mention to. So if you don't mind, could we start, Cassidy, with you and start off, and then Krishna and Austin, I'd love for you to jump in. Why do we need this digitalized economy and Bitcoin and blockchain? I mean, what's wrong with government-issued currencies and banks?
So I would start with kind of where Centrifuge is focused, which is the barriers that exist for anyone to be able to access, whether it's banks, financing. I mean, really, it's at the heart of it, access capital that will let them grow their business, buy a house, whatever it happens to be. So at the moment, the financial system is pretty much catering to the large players in the system. And also, on purpose, sort of excludes certain groups of people, whether it's because they're deemed to be illegal in some way or not desirable in other ways. And so I think this has been a problem that digital currencies in general have really tried to address, is this open access. And then Centrifuge specifically really trying to get that in terms of open access to financing, and really targeting that specific aspect. And I think every project that I've seen in sort of that DeFi space is targeting that in a different way, which I find really exciting right now because we're seeing a huge growth there. And a lot of people are becoming aware that this is a real alternative. And it's not just some sort of pipe dream anymore. And that's been really exciting for me to see.
Amazing. Thank you for that. And that makes it clear that there have been barriers and some people are intentionally kept out of the space. Okay. So Austin, if I could go to you, I'm wondering if you've seen any difference in your business, if you will, from 15 September 2019 and compare that to 15 September 2020. Has anything changed for you? Or have you been protected from some of the mega trends?
No, absolutely. I think if you look at where we were at that time versus where the world was a year later, it was immensely impacted by COVID. And what did COVID impact? Governments were really scrambling to try and create the resources and help their citizens come out of this crisis. And that resulted in a lot of money printing, right? So there was an enormous amount of stimulus, and it made a lot of people question, well, what's the value of my currency if people can just print endlessly trillions of dollars? And that's something that in a lot of parts of the world where there is high inflation, people have been dealing with for a long time. And in the past, when looking for an asset to counter inflation, people have often looked to gold. But I think people are increasingly looking to Bitcoin because it has real verifiable scarcity versus gold. It's relatively scarce, but more is being mined all the time. Bitcoin comparatively is incredibly easy to transfer, incredibly easy to store, but also in particular, younger generations, since they grew up in such a digitally native environment, are inherently much more comfortable with an asset that is also digitally native. And I think we're seeing a shift there as well.
And I'm just going to ask a small follow-up, Austin.
Yep.
Has the pace or the scope or the scale or anything else changed about your work, or has COVID?
No, I think things are definitely a lot busier because there's so much happening in the crypto asset space, and it's really shifted a lot of attention to, I mentioned Bitcoin, but a lot of other things happening in DeFi, decentralized finance, like Cassidy was discussing. There's a completely new primitive where access to financial tooling is open to anyone. It's available 24/7. It's never down. And I think that's something that's completely new and really, really exciting. So a lot of those, and we're seeing a ton of users enter the space because of these new opportunities that didn't exist before. So, definitely a lot more attention, but also a ton more people engaging with these systems and really seeing the value of what they can offer.
Fab. Thank you for that. Krishna, I would love to hear an answer from you as well about what's changed for you from September of 2019 to September of 2020. And if you could also share with us maybe how you go about making investment decisions, and if that's changed from a year and a half ago to now.
Yeah, I mean, I think first of all, even looking at it at the micro level, previously, even crypto companies such as ourselves, we were using Wire, which is very ironic. And now 80% of business is in stable coins or Ether, which is a big transformation. And I think you're starting to see that layer of crypto finance emerge, where previously even crypto finance was just using centralized plumbing. And now we ourselves within this economy are using decentralized plumbing, which I'm very optimistic about. And I think that's going to be a huge trend over the next few years. Of course, in 2019, DeFi and NFTs and all these things were still sort of like emerging fringe technologies. And it's really fascinating just to see this sort of like backdrop of like, okay, macro Wall Street bets and all these different things come together as sort of these market forces that enable this technology to gain more acceptance and adoption. So it's been mind-blowing to see that, because I expected that to happen over a period of 5 to 10 years, and it's happened over 1 or 2 years. And I guess on the investment decision side, I haven't changed too much. I generally tend to invest in things that I'm very passionate about rather than purely from a financial perspective. So I'm very interested in like frontier markets, particularly what's going on in Nigeria and Venezuela is very interesting to me. Like there are a couple of startups that I really like there. One is called Value, VALIU, which is a remittance platform for migrants. The other one is called Bitcoins, which is doing the same thing in Nigeria. And they're trying to abstract away the complexity of crypto and enable people to essentially transact with very low fees and with instant settlement, not just within that country itself, which is an easy problem, but cross-border. So that's where my primary interest lies. And of course, the decentralized web, Arweave, Handshake, a lot of fundamental layers that are not necessarily DeFi or NFTs, but they enable those technologies to become much more censorship resistant and essentially are a critical part of the infrastructure.
Manu, over to you. Oops.
Yeah. You hear me? So it's working. Yeah, so I was saying, Krishna, thank you for mentioning Wall Street bets. Actually, I have a question around what happened with Wall Street bets. Maybe you can elaborate or tell a little bit the audience that doesn't know what happened with Wall Street bet. What was it?
So essentially, I guess you have to start from a very long time ago when a meme trader called, excuse my language, but it's called Deep Fucking Value, and the other one, and his other name on YouTube is Elias on YouTube is called Roaring Kitty, and this guy was basically sort of like publishing investment analysis on GME, GameStop, and why he thought it was undervalued. And Wall Street Bets is essentially this Reddit or subreddit forum where retail traders essentially look for companies and look to participate in the upside. And essentially, GameStop was looked at by institutions as sort of a failing company with lots of cash but not much growth prospects, especially given the digitalized platforms that they compete against. And essentially, these retail traders took the opposite side of the bet and liquidated a lot of these hedge funds, and especially one called Melvin Capital that is backed by more prominent and larger hedge funds. I think it was either Citadel or Renaissance Technologies, but I forget the name. So essentially, after this, the GameStop stock went like 10, 15x. And Robinhood suspended trading of the stock. And a lot of the retail investors who got in were not able to sell. And essentially, after that, there was this whole tirade of like this little guy versus the institutions, which has resulted in, the SEC looking into it. There was a hearing recently. And very much in the spirit of the little guy against the institutions, Roaring Kitty or Deep Fucking Value essentially went on the testimony. And his testimony was why GameStop was still undervalued. So I think it's an interesting sort of look into the idea of retail versus institutions, and like Cassidy said, who is the financial system really built for? I think it's sort of like the ultimate manifestation of sort of meme trading. And how institutions are struggling to kind of like contain, the retail trading side, and how unfair it might be to some of these people that someone like Robinhood can just stop trading at any time. And I think one of the other problems that it exposed is sort of the T+2 settlement period that institutions are subject to, which is the settlement after any trade is essentially subject to like 2 days of clearing time, and in DeFi that's instant. So I think it has interesting ramifications for crypto, and how it can be a compelling alternative. But also crypto is very much about the little guy versus the institution. So it's an interesting tailwind. I don't know if Austin and Cassidy, since you guys might have more financial backgrounds than me, you guys might have something to add to that.
Yeah, I think you covered it really well, and it's a really interesting dynamic where you have the one aspect of censorship where some of the small retail traders weren't able to trade, but then you have the infrastructural reasons for why that happened. And in DeFi, you have both of those solved, where you have instant settlement, but also there's never an opportunity to censor transactions because all of the validation of transactions is completely decentralized. And what we're starting to see, and granted it's still early days, but there's applications where now on a 24/7 basis, you can trade synthetic versions of stocks. So on one protocol called Synthetics, another called Mirror, where you can actually trade a lot of the top names like Apple and Tesla and others, but do so in a DeFi context. And I think that points to where the world is heading, where right now the market's open 5 days a week from 9:30 to 4 p.m. I can't imagine 10 years from now that's going to be how it looks. So I think a lot of the traditional world are going to take advice from what's happening in crypto right now, and it's going to shift to more of a 24/7 world. But I'm really loving how that event is bringing more and more people into DeFi, and they understand why censorship resistance and decentralization is so important.
Yeah, I think that was my favorite thing about that specific event, was
Yes.
how many people came into DeFi and crypto in general because of that they saw just how many barriers are up against them in traditional financial structures, and how crypto is actually directly targeting those things, and that it's a real alternative now. So it was really cool to see that we've built up the space enough so that this event could actually really lead people over into crypto.
Yeah, thank you so much, Cassidy, for enlightening the audience. Great. I'm also wondering, what do you guys think is happening currently with Bitcoin? Why is the price is raising so fast? What is accelerating the adoption of Bitcoin and cryptocurrencies in general? Is it this thing that we just talked about, like being against the banks and against big players, or what is going on? What's happening?
Well, I'm happy to start off. I think one of the reasons is something I touched on early on, where a lot of the first major bull run where there was major market awareness in 2017, it was largely retail driven and institutions were on the sidelines. But more and more, you're seeing large institutional allocators, such as even traditional funds, pension funds, really across the board, entering the space and understanding that Bitcoin isn't going away and has such immense value as a scarce digital asset that's decentralized and has an independent monetary policy. So programmatically how it's going to behave and isn't at the whim of a central bank. And that's really spurring a lot of the recent price movement. And it's still so early in that chapter that I think it has a significant way to go.
I think I would add that it's a lot of people who are really skeptical of crypto at first and even spoke out against it, who are getting their minds sort of changed now and starting to see just how much potential is in this area. So that's been really exciting to see. I think this event certainly helped, this Wall Street Bets event. And in general, I mean, just speaking from our perspective, like with our product, it's been a lot of people who've always wanted an alternative to banks that now have a real option. So I think it's also just the fact that the space has progressed enough that we have real tools that are built now that users can actually start participating in. And I think that's also helped the growth a lot, that there's just so many DeFi products now that users can just dive into. And I think the growth of that has really given a lot of opportunity to people to just hop on.
Christian, did you want to weigh in on the Bitcoin runs?
Yeah, I think Austin and Cassidy covered it really well, but I can probably be very brief here. So I think one of the things that Bitcoin did really well over the last few years, or the Bitcoin community to be specific, is they've really reinforced this idea of this like gold 2.0 meme, and that's really caught on over the last year, especially with the monetary policy and people becoming more attuned to what the Fed is doing. And I mean, I have a very two-sided opinion on what the Fed is doing, because I think while they are printing a lot of money and diluting the supply and borrowing from the future, they have to do that to ensure social stability. But I think a lot of people looked at that and looked at the scale of that. In 2008, they just printed some $2-3 trillion, maybe even less if I'm not wrong. But over the last year, they've printed, I think, way more than that, multiples of that. And I think people are looking at that, and also the mindshare aspect of people like, I don't know, Elon Musk, Jack Dorsey, institutions like Mass Mutual, which is a very conservative insurance company that essentially put part of its balance sheet on Bitcoin. So I think, like Cassidy said, the very skeptical or conservative people coming to the space, Stanley Druckenmiller, or even like people like Howard Marks, who is extremely conservative, writing about it in his memo. I think that gives it a lot of mindshare, and given the strong tailwinds that we've seen, this amazing confluence of various factors over the last year, it's obviously really captured a lot of that value, and I think it's fairly justified at this point.
Yeah, and one thing actually to add to that, and like you were saying about all of these new entrants that have changed their mind or are becoming much more positive about Bitcoin, I don't think the market has fully priced in the impact of Elon Musk and Tesla purchasing the $1.5 billion of Bitcoin for their balance sheet. Because before, when MicroStrategy was doing it, it was something that, all right, CFOs had to determine, does this make sense for us? But it was still a very risky proposition, and not something that they could feel very comfortable doing. But now that the richest person in the world and one of the largest companies in the world has deployed Bitcoin to their balance sheet, it's massively de-risked that. And I think we're going to see a lot more companies start to do the same thing, where they allocate a portion of their balance sheet to first Bitcoin. But I think it doesn't end there, and you're going to see Ethereum and Polkadot and other crypto assets start living on corporate balance sheets.
Quick question for I'm very curious. Do you think the fact that the infrastructure now is vastly different from 2017 as well drives a lot of this, or is that too small a factor?
I think the infrastructure is actually very meaningful, because right now there's a lot of tools from the custody side and from the transfer side that make larger institutions much more comfortable engaging in the space. Whereas in 2017, a lot had to be done on self-custodied wallets. There wasn't the same infrastructure to send transfers between whitelisted counterparties, with a service such as Fireblocks. Bank of New York Mellon is entering the space, offering custody and transfer services. So I think a lot of the tooling is there now for larger entrants that just wasn't there before.
Yeah, definitely agreed there. I mean, just on a small scale, we've seen that just with the amount of companies popping up that have gone like, they were definitely interested in this years ago, but they had to go through this whole process of regulation to be able to offer those services. And now they're finally in a place where they can. And I think that's made it a lot more accessible for those larger firms to start to come in.
So I'm hearing two things. One is because of the increase in tools and accessibility, the little guy can start to overcome those barriers that were in place for the traditional monetary systems, government issued. And I'm also kind of learning that those tools also make it possible for large institutions and companies to adopt the very traditional economic tools. And that makes me wonder, like, does that undermine the little guy role of Bitcoin for the masses? And it also makes me wonder, in 10 years, will we have a similar equity divide? The super winners, the big winners, the late movers who didn't do very well, and we'll still have a large underclass that continues to not get the attention that a doing good world would wish for.
I would say maybe first to have a counterpoint there. I find it really exciting and validating that the large players are starting to come into this, because the structure of it essentially shouldn't be catering to them. The structure of it should open the platform of access to anyone. And then the fact that with that as the sort of underpinning of the entire space, they're still coming into it and they're still interested in participating. And I think for me, what that means is long-term, we're creating a system. I think, Austin, you alluded to this before, that's completely separate from the existing central bank-led structure. And I think that's the important thing, is that this whole system is useless if there's not these large players in it. And if it's just the little guys interacting with the other little guys, we're not going to get very far. And the fact that there are big players coming into the space just kind of shows that we can move away from the existing structure, and even the big guys are going to follow. And that to me is what's exciting.
Yeah, and then one of the really cool things about larger entrants coming into the space is when they do enter the space, it can create a lot more transparency related to their operations, whether it's supply chain tracking or other sorts of services. So I think it can also create a lot of benefits when centralized companies start to integrate decentralized and blockchain-based solutions. There's a lot of things that create value for the rest of the economy.
Yeah, to add to that, I think one thing that's fundamentally different this time is in 2017, every enterprise was trying to like co-opt this technology to create their own blockchain, and now they're all building on public blockchains. That is super exciting. I think that's amazing. Even like people like Twitter, they said, okay, maybe we should start building like this open source democratized version of Twitter called Blue Sky, which is a new social media protocol. And they're funding Bitcoin development, and they're putting a lot of cash into things like this. So I think that's fundamentally, very exciting. The nature of how they're involved this time is very different from the last bubble.
That's kind of breathtaking what the three of you just said. I mean, it's and Cassidy, coming to your counterpoint, it's really a breathtaking thing, and it's we are so privileged to have your input here to explain what is virtually impenetrable to some degree without having experts here helping us understand it. So given the increased transparency, that sounds like a good thing, because I think it starts to back into an area that Doing Good this organization and community wants to make a difference, and that's around social impact. Can you tell us a little bit about how transparency in supply chain could be one application, and do you have other thoughts about other use cases for blockchain and Bitcoin in the social impact area?
So I think yeah, so happy to kick things off. I think one really meaningful use case is just for cross-border remittances. And Krishna, you were alluding to this earlier, how there's been an enormous growth in the use of stable coins. And that was one of the limiting factors earlier days of crypto, where people wanted to own Bitcoin as a store of value, and people wanted to own Ethereum as the gas for this decentralized, Web3 ecosystem. But they didn't necessarily want to transact in an asset where the value could, fluctuate in the 20 minutes that you're making the payment, or the 1 minute that you're making the payment. So I think now with stable coins, you can much more easily do cross-border remittances, but do so now in this environment where you don't have counterparties that are excessively rent-seeking and taking, very large portions of the transaction through fees. And you can, make it much easier for people that are living all over the world to engage and interact. And especially as we're moving to a much more globally distributed world post-COVID. And you have these rent-seeking companies that aren't able to take those fees, and really brings a lot of benefits to the end consumer.
Yeah, I would totally agree there, and maybe add a little bit more to that point, which is that you can't have a real open market if you don't have transparency, if you don't know what the next bank would offer you in interest for the loan that you're looking for. And what if there's only one bank that's even going to offer you the loan, and you don't even have access to the other 100 banks out there because of regulatory issues, or just your local community doesn't have access to that? So I think that's a huge place where this ecosystem is going to make a change, is the fact that you have access to all of those new players now, and you have the transparency of knowing what all of them are offering. That makes it possible for them to actually compete for your business, and then your business is actually valuable to them in the end. And so I think the consumers, especially, the little guys, have been so hurt by the system because of its obscurity, that you don't know what the next bank could charge you for the same loan, or even that you could go to another bank. And so I think we're going to see a huge change here in terms of people getting access to this sort of financing from that. And I'm really excited to see how that sort of evolves over time as well.
I feel like that's a problem that people normally ascribe to developing countries, but even exists in developed countries. I'm probably in the median income category, and I have a few crypto assets. But if I feel insecure about going to a bank to say if I want to buy a house or get a mortgage, because they could just say, hey, you work in crypto, you're not going to get it. Versus I'm not working McKinsey or Ernst & Young or Bank of America. Even in very well-off countries, there's still such a large barrier to getting credit or to be able to make transactions, and that really shouldn't exist. I think that's really shocking to me even now when I try to I live here in the US, I have a bank account in Canada, but to make a transfer of more than $10,000 from my Canadian bank account, I actually have to go in person to a branch in Canada, and I can't go in person to Canada right now because they've banned travel. So what do? So it's such an acute problem, I think, just all over the world, regardless of where you are.
That's a really unexpected cross-border use case, where you can't go from Toronto to Brooklyn on a Tuesday.
And it would be even harder on a Saturday, which is the very cool thing about crypto markets, 24/7.
That's a great point. Can you give us a couple of now that we got our feet stable, we have understanding of the value and the purpose. Can you give us a couple of use cases that are maybe 2 years away, and then like a vision of what you'd love to see? One might say 10 or 20 years, but maybe I mean 7. Krishna, could you start us off?
I guess I mean, apart from the financial stuff that we talked about, I guess I really like this idea of the ownership economy emerging, because I mean, it kind of brings in all these different communities into this world, and it allows people to like start from zero essentially. So like I can come into crypto, I can come into this new financial system. It's kind of like playing an MMORPG game. So I can like earn money, I can build more capital, I can get access to more opportunities. And I think that's particularly interesting, for people like artists or other communities where they might not necessarily have a lot of capital, but they can come in here and earn that capital and also get access to new forms of capital allocation. And I think that's going to be a flywheel that's very unstoppable, because those are communities that are generally, they don't have access to that capital. And it's also extending like the utility of crypto to beyond just like, hey, I'll just buy Bitcoin or Ether and like speculate on it, but I can earn in it and I can denominate my capital and like my assets in it. And I can help other people like me get into it, so I can bring my community into it. And I think that combined with DAOs and these user-owned platforms like Mirror or Zora, which are publishing and sort of digital goods sales platforms. Those are platforms that can essentially bring more people into the space. So I'm very excited to see that space grow and see more people like essentially, we've talked about democratization of capital earlier. I think it's really hard to democratize the outcome. Like you can't guarantee equal outcomes, but you can create more ways for people to earn meaningful income from anywhere around the world. So I'm very excited for that part of the crypto economy to really kick off.
I guess maybe I'll jump in there next. I would say, to give a really specific example of one of the partners we work with, in 2 years, I'd love to be able to see any artist on Spotify be able to get financing for the music that they're already earning money for today, but Spotify only pays out once, maybe twice a year to them. And that's a huge burden on these type of professions, these kind of professions where you get paid on a very abnormal basis and they don't have steady sources of capital to be able to grow their own products, their own ideas, their own business. And so I'm really excited to see that. And I hope that happens in the next 2 years. And then in terms of like 7 to 20 or like maybe a longer term vision, is with that transparency of the entire supply chain, I think we're going to be able to get capital to all sorts of new sources of, say, for example, a cotton farmer. They might have so much data today of the last 10 years of their harvests, but they're not able to actually use that to get meaningful financing and capital for themselves. And I think that's really unfair, the way that the system's set up today, because it's not like we don't have that data, it is there. And a lot of that risk is just severely overpriced because it isn't transparent. And I think this is something that's a little bit longer down the line, because it's going to take some time for all of that to, one, become digitized, and then two, actually be put to use in a meaningful way. So I'm hoping it's closer to 7 than the 20. But that's definitely a vision I'd like to see.
Yeah, I think there's so many cool things happening right now. It's hard to place exactly when they'll happen, and especially with how fast everything is moving. You're not sure if it's going to be 7 years or like 3 weeks from now. But one of the things I'm really excited about, and this is on the NFT side, that Cassidy and Krishna were talking about, is for the first time, it's enabling creators to be able to share in the upside of their work. So traditionally, an artist would sell a piece and say they sold it for $1,000 and a collector bought it, and then the artist becomes really famous, they sell it for $200,000. All of that value accrues to the collector. And when you have art structured as an NFT on a blockchain, you can programmatically ensure that artists get royalties for secondary sales of their works. So 10% of the payments in each subsequent sale can go to the artist, and I think that's a really, really interesting paradigm. And we're seeing a whole bunch of platforms pop up where, where there's really large mainstream artists that have quite a following, and then there's also smaller artists that are experimenting and creating a whole bunch of different novel forms of their works that's only possible in a digital context. So infusing an image, but with video, with music, having it be programmable. So async art is an example where art can have different layers. Rarible is another really great example where they've been very focused on having their community have an ownership stake in the protocol, and also control the direction of what they're building via governance. So there's some really cool experimentation happening right now, but I think even past the experimentation phase where a lot of it's being implemented. And then art is really just the tip of the iceberg. I like to think about it as all digital IP coming on chain, where you can think about it: art, music, intellectual property, copyright, all sorts of things that now can be governed and distribute royalties and payments in a much more efficient manner.
To add to that, I think I'm really interested in this idea of like the metaverse. So I think all of these like things that we're building now are going to feed into it. And one of the coolest things about Second Life, the game, I'm not sure if any of you guys have played it. I've tried to play it, but never got fully into it. But I understand the concept. But they had this massive like in-game economy, their own monetary policy. They had like you could like essentially there are people making millions of dollars from that game from all over the world. And I think with NFTs and the metaverse, you're essentially going to bring these digital goods some sort of like social currency or utility. And I think that's going to unlock a new like layer of value to these things. And you can essentially like, the next big art gallery the next Louvre could just be in a metaverse. So like, I'm really excited to see those kind of things emerge. I think that's like beyond just crypto, where like, I think you need VR and AR to mature. It's getting there, but those technologies are going to converge at some point, and we're going to have like some new mind-blowing platforms that we can all be a part of.
Manu, my friend, you're on mute.
Manu, you're on mute.
Okay. While we work that out, can I ask your question, Manu? Beautiful. So ICOs democratized in a way investing. Do you think that NFTs will have a similar effect, but more focused on creators and IP?
Yeah, absolutely. I think it's bringing the creative economy from something that was very siloed, limited to access based on galleries, based on relationships, to something that, similar to DeFi, is not siloed at all and democratizes access on a global scale. And I think it's really bringing bringing some of those same dynamics to the creative economy is going to, one, level the playing field. It's going to create a ton of new opportunities for artists, but also I think it's going to create a lot of new possibilities that we're not even contemplating now. Just like when the internet first came around, people were trying to bring things from the physical world and apply it to the internet. So like put the white pages online. And then the next level was like, all right, social media, what can be done that wasn't possible before once you have the internet? And I think we're going to see so much of that in the creative world right now.
Cassidy, oh, Krishna, go ahead. Cassidy, I see you nodding your head. Go ahead, Krishna.
So yeah, I have an example of what Austin just spoke about, which kind of like blew my mind. I think it's a very basic example, but recently, I mean, there's been a launch of a decentralized publishing platform called Mirror, which is essentially like Substack, but with like sort of this decentralized user-owned network. And a designer called John Palmer, he basically like crowdfunded the creation of a new essay. So like he raised like 1 Ether or something like that to essentially fund this like creation of like this essay, which is going to be a public good. And everyone who participated in that crowdfund essentially got rights to the sale of the essay NFT in the future, right? So I think that kind of interaction, like that Austin talked about, like these like kind of sell on clauses and other things that you can program into this, like it enables people to really like participate in that upside. And I don't know what that looks like in 5 years or how people iterate on it, but I think it's certainly very interesting that what if this was Paul Graham writing the essay from Y Combinator, and everyone reads his essays, it has value, like people read it again and again and again, and I, as someone, might like to own part of that, and maybe when it sells again to another person, like I might capture some of that revenue as well. So I think those things are already happening right now on various platforms. Zora is doing a lot of work on this, so I'm very excited for that space to emerge as well.
I think one thing that we're really talking about, that I think NFTs are just a way of building on that idea, is cooperative ownership. And I think, Austin, you mentioned that earlier today. But co-ops are a thing that we've seen in all kinds of ways. Over the last 100 years, we've seen several different versions of them. Even like clothing stores like REI, that's a cooperative. And NFTs are just taking that to the next step, I think, and enabling newer structures of the cooperative to sort of emerge, and maybe making it even more concrete and accessible for basically any sort of artist, regardless, if they're a writer starting out, someone who's like a musician that wouldn't necessarily get access to funding to just create an album. They'd usually have to just fend for themselves. Maybe they're sleeping on a friend's couch, and they're not creating their best work or reaching their best potential. And I feel like NFTs are one of those new technological innovations that can sort of push that idea forward and give it a new breath of life, that we can see a lot more that gets done in society because that's another tool that people have.
The benefits to artists and creators just sounds like there's fairness and equity coming, at least to a degree, and that's very heartening. So Manu wants to ask the last question. Wait, give me a second. He's desperate to be with us. It's just not able to. Given the space he's in, you'd think that they just might be beaming Wi-Fi to the retina, but it's just not happening. Maybe I have a vibe. I don't know the exact question he wants to ask, but I want to go back to something that, of course, is close to our hearts, and that is social impact and how we reduce the barriers and the inertia and some of the skepticism, which I think would be the easier road to take, is to reduce the skepticism. But COVID brought out some very good things in people across the world and unexpectedly, even in Brooklyn. And I guess we want to do what we can to free up people to do good in small and big ways. Can you help us understand even more how this part of the economy can help us do that? How the blockchain rails can help us do that, and the currencies might help us do that?
Yeah, one area where I think we'll see a major difference is through the creation of DAOs and making coordination a lot more efficient. And we spoke about this quite a bit on this panel, but I think it's worth mentioning again that when people want to do social good, it's not necessarily with the person who lives down the street. It's a global world, and people are working with people from all over the world, and improving the tooling that you have to set up those sorts of structures. And decentralized autonomous organizations, or DAOs, are really, I think, the next evolution of that structure. So I think we're going to see more and more of that, and that's going to create a lot of carry-on benefits.
Brilliant. Thank you, Austin.
I guess I'll add another point there, which is, I think you mentioned, sort of reaching equal social outcomes, like as a final destination. But the first piece we need to get there is equality in access in the first place. And that's a huge thing that this space as a whole is targeting, is censorship resistance, and having structures that don't rely on a central entity that controls it. So whether that's a central bank, whether that's a government, whether that's a company that's deciding things for its users, from privacy to the price of the product. I think in all of these different ways, we're seeing this space break those barriers down and allow users to have that access and also have a say in the tools that they're using. And I hope that will eventually lead to better outcomes across the board.
Fabulous. Krishna, please.
Yeah, I think like we spoke about earlier, it's really about like democratizing opportunity and sort of talent on a global scale. So it shouldn't matter whether you're living or you're born in the U.S., which is historically a great advantage, or whether you're born in Nigeria or whether you're born in Vietnam. If you're the best person for something, then you should be able to access that capital. You should be able to access that opportunity no matter where you are. And I think we're getting closer to that, like sort of these platforms that are truly global, enable anyone to participate. DAOs, like Austin mentioned, are the first example of that. In DeFi, you now have like developers from all kinds of countries, no matter where they're from. The government then just votes to pay them the same as a top developer anywhere in Silicon Valley would earn. I think that's already a fundamental like step in this direction. And it shouldn't matter whether you have a visa to work in X country. It shouldn't matter which country you're in. It shouldn't matter which bank you're using. And I think that side of capital allocation and crowdfunding and sort of liquidity that's democratized is essentially going to help drive these collectives to deploy their capital towards causes and towards people that previously might not have been able to access something like that.
That's fantastic. It makes us feel like we're on the right road, to providing some setting where, number one, because this is the first audience, the creators and artists and content makers of whatever types, they get the right deal. And then further in the future, that we can help communities wherever they are located or co-located increase their self-sustaining and self-governance, regardless, I thought, Krishna, the way you said that is so powerful. So thank you for that. Manu, don't move too much. You take over.
No, I just wanted to say that I'm super, super happy with the whole conversation and with all the contributions that Austin, Cassidy, Krishna, that you guys made. It's making me super bullish on the things that we're working on. And yeah, and actually, I'm super, super happy with the things that are happening currently in the space, because I think it's going to enable a lot of innovation. It's going to enable a lot of communities to co-create, collaborate, and become self-owned, self-sustained, and self-governed. So yeah, I think it's we're going in the right direction. I'm super optimistic. Thank you, everyone, for joining today. And
thank you so much.
Any last words? Any last words, Krishna, Cassidy, and Austin?
Yeah, I mean, I guess just to say it's really it's a lot of fun working in this space, because there's so much innovation happening and so much that's enabling positive good, but also just really cool technological advancements. So it's been a lot of fun discussing all of these trends with the whole panel.
Yeah, same. Thank you all. Thank you, Manu, Wendy, for hosting, and Austin and Krishna. It was a great discussion.
Yeah, really enjoyed the discussion, and I felt like it flowed really well. And I think sometimes it's nice to synthesize whatever we're like working on and reading and stuff, and then it helps you feel like, okay, we're not just living in an echo chamber, but a lot of this stuff is real. So I'm really glad to be able to take this opportunity to talk to everyone here, and thank you so much, guys, for organizing.
Brilliant. All right, and can we invite you back for round 2, whatever that looks like?
Yeah,
absolutely.
Definitely.
Absolutely.
Fabulous.
Yes.
All right. Thank you so much. It's been a huge, huge pleasure and eye-opener. And so now for our audience members, we have about 3 or 4 minutes to visit some of those product booths, the networking bar, and then we come back for the next panel taking a deeper dive into digital currencies. We look forward to seeing you then. And Cassidy, Austin, and Krishna, thank you again. Fantastic.
Thank you.
Thank you. See ya.
Thanks, everyone.
See ya. Thank you. Bye-bye.